Hello everyone, and welcome to another video from the series of the psychology of trading. Today the topic is everything you wanted to know about the FOMO but were too afraid to ask. So as you possibly noticed, we will speak about the FOMO today. Of course, before we will start, please take a while to read the disclaimer. It's a standard slide that I show at the beginning of any presentation. So we are going to start with the quote from Alexander Elder, which says, remember, your goal is to trade good, not often. And this quote is very in line with our topic today, which is of course the FOMO. What is FOMO in trading? What is exactly that thing that happens to so many traders, especially the newbies, right? The beginners, right? What are the causes of the FOMO? Who is a FOMO trader? Apparently there is a certain type of a FOMO trader. What are the FOMO triggers in trading, and what we should do to avoid the FOMO and to avoid to be the FOMO trader. This is the agenda of today's meeting. Let's dive in then. Please let me begin with this quote, which is again one of the key principles of the psychology of trading. One of the biggest hurdles you have to overcome as a trader is staying in the market long enough that you understand the market mechanisms and that your psyche, your learned and habitual reactions are no longer your enemy. Because in trading, basically you are your biggest enemy, and this definitely doesn't count as something that you would like to invalidate or cancel. This is your major hurdle, major obstacle, something that is on your way to become a successful trader. So market is not your enemy. Your psyche, your learned, your habitual reactions that you use in everyday life are your basically are your enemy. What is FOMO? The FOMO, what's the definition of FOMO? What are we dealing with? The FOMO is a fear of missing out. You possibly heard that term before. It's a relatively new addition to the English language that is an internal part of trading. For example, the feeling of losing trade opportunity that lead to entering trades without the sufficient thought, or the closing trades at inappropriate times, because this is what others seems to be doing. For example, it can even cause traders to risk too much capital due to the non-compliance with the risk management rules, reliable research and analysis, or the need to follow the herd, follow the other traders, follow the other people that actually are involved in the process of trading. For some, the sense of FOMO created by seeing others successful at trading is amplified by the fast pace of the markets and volatility, when it seems like there is a lot to lose. To help you better understand the concept of FOMO in trading and why it does, we will identify potential FOMO triggers and their impact on the day trader success. In addition, the key examples will be given to illustrate the problem and what a typical day trading looks like when traded under the influence of FOMO. There are many tips to overcome fear and other emotions that can affect consistency and discipline in trading. One of the most important characteristics of successful traders. Fear of missing out on a big opportunity in the markets is a common problem that many traders will face during their careers. FOMO can influence every traders, regardless of experience, regardless of the screen time, strategy, and market behavior. So in this era of modern social media, which give us unprecedented access to the lives of the others, the FOMO is a common phenomenon. This is because the feeling that the other traders are more successful and can result in over expectations, a lack of long-term perspective, and overconfidence or too little confidence, and recurrence to wait. Emotions are often often a driving force, let me say, a driving force behind the FOMO. If left unchecked, they can lead traders to neglect their trading plans and exceed their comfortable risk levels. So the common causes of a FOMO basically have roots in emotions. Sometimes the roots is a motivational one, right? So someone can be motivated to trade only in a short-term periods, on the short-term charts, for example, and not having a long-term trading perspective, right? Very often the too high expectations are connected with something that we call the beginner's luck. And very often the beginner's luck is connected with the FOMO trading as well. Of course, this is eventually connected together with too much self-confidence, right, and the lack of the discipline. So please be careful every time you will notice this kind of behavior in your trading. Please consider the fact that you might be trading under the FOMO, or might turn or change your trading strategy to fit the FOMO and to do what the other traders, especially in the social media, reporting on the social media, are doing. What is the FOMO trader? The FOMO trader is characterized by two different stages that are basically being very much repeating itself. It's like a cycle. It's like a cycle of ups and downs, or increasing, decreasing of a wave. For example, when first we get greedy because we get excited, so we want to buy, despite the fact that there is no reason for our strategy, for our psyche, for our emotions, for our risk management or our analysis to open the trade. We start to trade under the influence of excitement or under the influence of greediness, right? Then, of course, this trade is very often wrong, and we start to fear that we will lose the money. So the anxiety kicks in. So what we do, we sell or close our positions, and very often we notice that our account is being, of course, lower than the beginning, than the initial amount. So, of course, we are impatient, and we want to get even as soon as possible. So we don't wait for the signal, we don't wait for the setup, we don't wait for the good risk to reward ratio, we don't do the analysis. Being impatient, and that is eventually connected with a lack of a discipline, result in another trade. Of course, we get impatient, we lose our patience, we again get greedy, get too much excitement from the market, because we see, for example, other people are trading, other people are buying, and are reporting, for example, some kind of profits. Then, of course, we open the trade, and the cycle repeats itself. So this is the typical behavior of a FOMO trader. Those the traders that operate on FOMO are likely to have similar characteristics and will follow a certain set of assumptions. Below is a list of the most important things a FOMO trader could say that sheds a light on the emotions that can affect your trading. I knew it, for example, it says a trader who noticed the setup but didn't use it, right? And he was right, of course. The other thing is, not this time, says traders who enters too early after a missed trade. Well, it happens, right? I could have made so much money today when the trader reflects on profits in retrospect, right? When he sees the setup that actually could have been used, but he of course didn't pull the trigger. I've waited too long for this transaction. This is something that overly anxious trader hunting for a trade with a finger on the trigger would say, and he said he won't lose this opportunity. He's been waiting for too long for this transaction, so whatever happened, he will pull the trigger and open the trade. The other excuses used by the FOMO traders to rationalize their behavior. There's plenty of room for movement, right? The trader who jumps into trades too late after the move was done because he was too scared to enter the first time when there was really the opportunity to trade, right? So there's plenty of room for the movement, so we will likely go up and up and up to the moon, like the cryptocurrency traders are saying. The other thing is I have a feeling because I can justify my entering into transaction that doesn't meet all of my strategy criteria, right? And my risk to reward criteria, which is of course the money management criteria. So this time it will be this one time I will just trade this one time because really I'm counting on luck, not my strategy. This is another excuse. And of course I will only enter a small position, just a small one. This is what trader says that is trying to justify the breaking their own rules, the rules of their own strategy. Another very common excuse. So not only our own behavior affects FOMO, but FOMO can be caused by a variety of the situations, some external situations, right? So those are some external factors that can cause a trader to experience FOMO. What are they? Violent markets, right? The FOMO is not limited to bullish markets where people want to hook up. It can creep into your psyche when the market moves in any direction, because no trader wants to miss a good deal. Doesn't matter if you buy, if you sell, doesn't matter. It can happen during a violent markets in any direction. A winning strike. Under the influence of a recent success of a series of a good profitable transactions, it's easy to see new opportunities and get caught up in them, right? So please be careful on the winning strikes. Recurring losses. Traders who fall into a vicious cycle of entering a position, fearing, closing, and then re-entering another trade when there is anxiety and disappointment about not holding back. Of course, this could eventually lead to greater losses, and of course, this could lead to over trading. What else we have here? We have news and rumors. So, as I said, hearing rumors circulating in a trading room, maybe over the web, can increase the feeling of being excluded from this circle of news and rumors, and the trader can feel that he's out of this wheel, out of this circle of the circulation, and he wants to be a part of it. So he enters the trade, right? Everyone is buying it. I want to be a part of it as well. Why everyone is buying it? Because social media, especially financial Twitter, for example, can be toxic when it looks like everyone else is making money. Everyone else is buying something, some stock, some currency, some cryptocurrency, and it's making money. So it's kind of important to to take your social media content at face value, right? And take the time to research influencers, research various social media accounts, and rate this post to observe, to see whether this is a genuine trader or a person who you can trust in some way, or this is just some guy that is just trying to start a FOMO, right, around a certain asset like a token, cryptocurrency, or a stock. So please be careful. External factors affecting you are very, very real, and then can get you into the state of a FOMO, and you can be a FOMO trader, basically. So what is the difference? What is the difference between the characteristics of a FOMO trader and, of course, the disciplined trader, right? What is the certain difference that that can differ this two types of traders. As you can see, we have on left we have a disciplined trader, and on the right we have a FOMO trader, right? So the disciplined trader is a trader with a plan, the trader which that plans the trade, that sticks to the plan and strategy, has his confidence in his strategy, in his way he is viewing the markets, and keeps the trader's journal, the trader's diary, or whatever you want to call it. He just writes down his trades and his feelings about this traders. So he analyzes the markets, he tracks news and data, establish a comfortable risk to reward ratio that suits his strategy and his psyche, and the stop losses and the take profits orders are set according to his money management strategy, and of course he sticks to the plan, keeps this trading journal, trading diary, and achieves the planned goal. This is the trader with a plan. So the FOMO trader, who is trading under the FOMO effect, reacts impulsively. So he joins the trend by force, unconsciously. Then he feels sorry for the lost potential and opportunities to earn, and then he opens even more positions because he thinks that will maximize his profits. So he treats opinions of other people, of a financial Twitter, or whoever else really, and follows these rumors, maximizing the market exposure, buying everything he can lay his hands on. Very often he enters risky trades which are not to his money-making strategy. He panics, he is anxious, he closes very often the positions are lost, and then, as I said before, he repeats the cycle because there is no plan in his trading. There is no strategy. He doesn't. He doesn't provide any kind of he doesn't keep any trader's journal or diary. The FOMO has control over him. He is in complete mess, and very often he loses all of his money, right? Because he is trading. He doesn't trade what he should be trading, which is his own strategy and his point of view. He trades the trend that is being created artificially by the other people. So there is a certain difference between those two types of a trader. I think this is very obvious right now. So beating FOMO starts at the beginning with a greater self-awareness and understanding of the importance of a discipline and risk management in trading, where while there is no simple solution to prevent emotions from influencing trades and keep FOMO on the tracks, there are various techniques that can help you to make conscious decisions and trade more effectively. So here are some tips and tricks on fight with the FOMO. The first thing is very simple. There will always be different trading opportunity, right? This kind of opportunities are like buses, so there'll always be next bus, right? It might be not immediate one, but soon there will be the next setup, and very often it will provide another trading opportunity. All other traders are in the same situation, and you are not alone fighting with the FOMO. So that might be a turning point for many traders, right? And it might make the FOMO less intense, knowing that you are not the only one who is under the influence of FOMO. The other people are fighting with it as well. The third thing, stick to the plan. Every trader should know the strategy, create a trading plan, and stick to it. This is the way to the long-term success. If you're trading without the plan, of course, you are the FOMO trader, as I said and showed on the previous slide. The key is emotional control when trading, right? The key thing is emotional control. You need to learn to put the emotions aside. So now, a trading plan will help and will increase your trading confidence, but you must know that you cannot just cut out the emotions from trading. They will always be present in your trading. You need to learn to put it aside and control your emotion. Traders should always use capital they can afford to lose. This is obvious. If you are trading your own account, it's obvious to trade only the amount of money that you can afford to lose. You can also use some sort of the orders that can prevent you from losing everything if the market changes unexpectedly. Knowing of the markets, market knowledge is essential. So you should conduct your own analysis. You should do it and use it to inform the trades, right? To take all of the information on board and to be aware of every possible outcome. You should have plan A and at least a plan B for today, for trading this cryptocurrency, for trading this stock, for trading the US dollar, whatever. Really, it doesn't really matter. So knowing is essential. Knowing your market, knowing your sector, knowing your currency. It doesn't really matter what you are trading. Those are the same rules. Please remember that the FOMO is not easy to forget, right? So this is very important, but you can control it basically if you use the right strategies and if you use a certain approach towards the FOMO. All of the investors, all of the traders can rise above the FOMO, can really beat it, can get comfortable seeing others trading under the FOMO, but not being a part of it, right? But this is your goal, basically, and you must know that you are able to reach this goal. And of course, the last part, last tip, last trick of the trade is keeping a trading journal or trading diary, which will help you to plan your trade, to realize your emotions, to get into yourself more deeper than usual, and then this is the way to get your learned and habitual reactions that you use in everyday life to get to know them and to beat them, to rise above them. All of the most successful traders use the traders journal or at some point of the time, and they were using their own experience to help them plan the traders, the strategy, the setups, and all of these important trading techniques that are really necessary to beat the FOMO. Please remember about all of this interesting tips and tricks that can allow you basically to get above, to beat it. Maybe it's not kind of a perfect word for this situation, but the key thing is that you must realize that you are trading under the FOMO, or you are, or you've been a FOMO trader, and now you are trying to get one level higher than your regular trading activity, right? So if you didn't use a plan, use a plan right now. If you wasn't disciplined trader, please work on your discipline. If you have not been using the trader's diary, use it now. If you very often follow the financial Twitter, and to get more comfortable with your trades, to reduce the anxiety, basically stop doing this and rely only on your decisions, on your strategy, on your money management rules, because getting more familiar and comfortable with those will lead you eventually towards greater profits and bigger success on the financial markets. So that's everything for me from the FOMO webinar. Thank you very much for your time, for watching this short presentation. This is the way you can contact the Global BD Trading company if you would like to see how the traders, the proprietary traders on US stock exchange are trading basically from their own trading floor in Katowice. If you would like to meet them, if you would like to take a chance on the professional the desk, the trading desk, and be allowed to the professional trading platform for one trading session, please contact the Global BD Trading company, and they will arrange a meeting for you to see how it is basically to trade on the US stock exchange, NYSE, Nasdaq, or any other. So if you are interested, you have all of the details here. And that will be everything for today. Thank you very much for watching this presentation, and I hope we will meet again in another time when I will speak again about interesting aspects of trading psychology. So take care and bye bye.